Eric Muathe at Muathe.com with world market analysis for the weekend of May 6th and May 7th, 2017. Let's take a look at markets here. This is how Asian markets closed on Friday. Pretty much for the most part down, but we can see that Japan was up. Take a look at European markets, which closed higher. We can see that the French market was up nicely, about a percentage point as of Friday's action. Let's take a look at the Americas. And we can see nice gains. The Brazilian market was up about 1%. And the Canadian market, US markets were up about 0.41 as far as the S&P 500 is concerned. Let's take a look at those world charts. Let's begin with the Australian market. We can see after 1 week of trading for the new month, we are back below the previous monthly high of 2015, and the level we've been watching was 5898.48. So as of right now, it seems to be struggling to hold the breakout. That's not good. Keep in mind there's a line of resistance somewhere around here on the monthly RSI that the market seems to be responding to. So what the bulls want to see is the market to go back and stay above 5898.43. Otherwise, those who are bearish are glad to see that the market is struggling to hold above the prior breakout line. So anything below this price does change the equation, and the complex here trying to suggest that as long as the breakout is failing, the next trend might be down. While market bulls would like the market to hold back above this level and keep the breakout intact. So reclaiming that level is what the bulls want to see. So right now it looks like the bears have taken a little bit of the ball and they are pushing this market lower. Anything below 5898 is just confirmation of potential weakness in the coming weeks. In fact, if you take a look at a longer term picture, one can also see that if you take the lows of late 08, early 09 and just draw it like that, you can see that this line here gives us a break off the highs of 2015 here. And so what we do is extend that line, and it seems to be coming into play in the current market. The market has come and touched that line. Month to month we seem to be struggling to hold above that line. So that's one other layer of consideration for potential resistance. Also, we can see there's a line connecting the previous break off the highs of 2015. Once we broke below this level here, the market did pull back. So a break of this trend line here brought the market lower, and now we seem to be hitting that level and showing resistance. So as far as the early part of this month looks like to be pointing, is potential for resistance unless the market can change, turn positive and hold above the two resistance lines that we are discussing here. You got your previous break line from 2015 and also this backtest line. Until we are back above these two lines, chances are this market is pointing to lower prices in the coming weeks and in the coming months. If we take a look at the Shanghai Stock Exchange, the Chinese market seems to be trading sideways, going back to about, let's call it since this time period here in October of 2016. We've been trading in this range. We continue trading in that range, with the risk being that there's potential for downside. If the market moves below RSI 50, we might get a big monthly move lower. The last time we dropped below 50 was here for this huge drop at the beginning of 2016. So we need to watch this. This is the risk for potential lower prices if this does not hold that RSI 50 level. And we can see the reason for potential resistance is we're pretty much coming back to test this break line, the break line of late 2015 highs, and the market's been coming back and testing that level in late 2016 and early 2017. Seem to have formed a double top. So we have that rejection on that line. So anything that moves the market below 50 might suggest to expect a big down month. Now, not all markets are giving sell signals at the beginning of this month. Only 1 week of trading so far. But we can see here the KOSPI is doing the best it can to break out, as you can see above the prior all-time confirmed monthly closing high. The level to watch there is, as long as the KOSPI is trading above 2192.36, this is a good weekly and monthly breakout. So it needs to hold above that price to convince bulls that there's intention to move higher. Also, we see that the RSI has moved back above 69.1. The last time it held above 69.1 was during this time period here in late 07 for this nice explosive move. So it needs to hold above 69.1 on the monthly to continue acting strong. So right now we need to give the bulls the benefit of the doubt unless the market moves back below this price, and also unless the market moves back below 69.1. So for now, given the first trading week of May, looks like the market is doing its best to convince market participants that it is poised to move higher. Now, I really have to stress this point because this is a monthly chart. Things are going to play out over a period of many months and sometimes tends to be very slow in reacting. But you can see that this is a critical level, as we discussed in a prior video. This was the break of the highs of 2007. And of course, after that break, we go into a major bear market worldwide. Now, if you take that information, that break line right there, and draw a straight line, you can see that we stalled with a double top here in late 2010, early 2011, which gave us the highs here before going into another drop. And then we were stuck in a multi-year time frame sideways market. So we went sideways here for many years, pretty much within this range until recently. So now that we are coming back to test this red line, the key month to month is whether we can hold above that red line or not. And again, let me draw that line. It goes back to this break, which was a major break in late 07. And this line, if the market can stay above this line, then the bulls are definitely clearing the resistance. Otherwise, failure to hold above this line month to month might still suggest that ultimately this is setting up for a major drop. But the key again is to keep it simple. Just watch that prior monthly closing high from 2011, and it is 2192.36. Anything above this price, which is right there, would suggest that the market continues to be stable to outright bullish, as long as it is holding above that prior closing on a monthly closing basis, that high from 2011. As an example of this potential resistance, take a look at the Hong Kong market. We are still within range of potential resistance. This is where we broke down off the highs of 2015, and we go into a major drop from the highs here to here, major drop. And so we are still coming back to test that level right there. As long as the market is down for the month, it might be suggesting that this is what it is respecting, which is that line. So anything confirming resistance on the black line there might suggest that we are still potentially looking at markets that could stall. If bulls want to advance the ball beyond current levels, they definitely do need to move above this line of resistance. We are right now showing resistance, so we have to assume that early signs here are that the market is positioning itself for a potential move lower unless it can clear this line right here. If we take a look at the Singapore markets, I'll share with you 3 lines that are potentially going to be challenging, which is the top side monthly RSI resistance line. As long as it is above that line, we have to assume that it is doing its best to break out. So that's one line that could be a problem, but the market can clear that line as it is trying to do and advance beyond current levels. The other line that could be a challenge is the recent break. So this break right here in 2015 brought the market lower. A break there brought the market lower. Take a look at where it is coming to right now, coming to test that level. Failure to move above that line might suggest that we are still within range of potential resistance on a month-to-month basis. So that's the second line. The third line is a back test of this break. So you see this line here was the break line here. And so what we do is we just extend that line, and you can see that the market is coming back and is gonna back test this line right there. So failure to hold above that line is a third line, which might suggest that net, if all these lines show rejection, then we can logically expect the market to be due for some type of a pullback after a nice run off the lows of early 2016. Otherwise, if the market is to move beyond current levels to the upside, it needs to clear all those three lines. And again, line number one, we got line number two, which is this breakpoint from 2015, and then line number three is the backtest line. So the market needs to clear all those three lines if it is to see higher prices. Failure to do so might suggest that we are due for a major correction. If we take a look at the Nifty, I'll share with you two lines that could be a problem. Again, here we see that month to month, this is the big picture, and again, this is going to take a while to play out. We got this break line of the highs of 2015. That break point brought the market lower, and so we are coming back to test that line. And as long as we are negative for the month, chances are this is where the market is stalling, and this might be a major high. And also we have another line, which is the backtest line. If we just draw it like that, it gives us this break point, and so we extend that line. So you can see that this is where the market is also struggling to hold above. As long as we are seeing rejection on those two lines, chances are this is as high as the market goes month to month, not necessarily day to day. And if we take a look at the weekly, you can also see that if the market is to trade well, it needs to move its weekly RSI back above 69.1. Right now it is back below that price or RSI level of 69.1. The more it is being rejected here with multiple attempts when trying to move above 69.1, that's not a good sign. The last time it had multiple attempts and failure was here for the highs here and here before we get this weekly drop. If you take a look at the daily, you can see that the daily is showing negative divergence. We had an improvement in day-to-day price closing highs, but take a look at the technicals. They were rejected on this line, which is showing declining strength. That negative divergence could set the stage for an even bigger drop, and we can see this also on the hourly. Take a look at this high here, which came on declining technical strength. So that negative divergence, and in fact we made the high on an hour-to-hour basis here, but the RSI failed to move above 61.8. That tends to be the worst type of negative divergence. And again, take all this into consideration: the weeklies, the monthly, weekly, daily, and now the hourly. All this right now are pointing to the potential for a swing trade lower, maybe even the beginning of something major to the downside. If we take a look at the South African on a weekly basis, we are coming back to test this break line. This break line brought the market off the highs of 2015, and over the last couple of weeks we've been trying to move above this line but unsuccessfully. So until we can clear this line on a weekly, we can assume that this market is sideways to down. If we take a look at the longer term monthly picture, we can see that this was the break on the monthly chart, all data, Dow Jones South African Index, and we can see that this was the break of the highs of 2008. And take that information, draw a straight line, something like this. You can see that when the market's trending well, it's been holding above this line. So you can see support on this red line off the lows of 2010, support here again of the lows of 2011, and then we broke below here in 2015, rejection of the highs there, we broke back below it here of the highs here, and now in the beginning part of May we seem to be struggling there. So month to month, that's the challenge. Markets need to be above that red line, otherwise anything below that red line is again a sign of a market that is sideways at best, bearish at worst. If you want to see the strongest markets worldwide, they tend to be right now in Europe. You can see here that the French market, all right, there's a French market, broke out above the prior weekly closing high from 2015. So we see a huge gap, and it has stayed above that, closing at the highs for the week, and the level there was 454.52 4046. A little bit messy. 40.46. So as long as it's holding above that, that's a breakout. Keep in mind, right now we are looking at the the weekly RSI holding above 69.1. As long as the markets are holding above this number on the weekly, these markets are going to be sideways to bullish, no doubt about that. And another key level to watch is, as long as we are breaking out above 2015's monthly closing high, we need to give the bulls the benefit of the doubt to push this market higher. The level to watch there is anything holding the French market above 5082.61, which is this from the closing high on a monthly closing basis from 2015. So right now it looks like a good breakout in terms of the price. Now I'll share with you why this could also be a trap, and the potential for a trap exists based on the fact that if you take a look at the backtest line, as we've seen in other markets, something like that, this line is coming in play. All right, so we need to be watchful of this. We broke below here, we drop, we are coming to backtest that line. So the best thing that the French market can do is it needs to hold its monthly RSI back above 69.1. Failure to hold above the 69.1 threshold is also a sign that this current move could actually eventually fade. So that's one potential layer here and of resistance. There's another way of looking at this, which is just take the top side of its monthly RSI. Keep in mind, it's going to take a couple months for this to play out, and you can see the top side monthly RSI resistance line might be coming in play. Now the question is it going to be able to clear above that line, or is this line going to prove to be very strong and stall the move? Also, don't forget that there's also the second backtest line here. So until we clear and move above these two lines, chances are around here this could also be a trap. If we take a look at the German market, it closed at the highs here, and we can see that as long as the weekly RSI is above 69.1, we have to give this market the benefit of the doubt. The breakout looks to have some quality and some legs. Take a look at this formation here. Looks like a nice cup and handle breakout formation. Now you can use either this recent weekly closing high as a pivot point or your buy point. That was a nice breakout. Nice breakout there last week, and that level there, the pivot there, can be 12,312.87, going back to this weekly closing high, or you can use the weekly closing high from 2015, and that level there is 12,374.73. Either way, you still get a good breakout, as you can see. So on a weekly basis, this is a good breakout as long as the RSI continues holding above 69.1. We take a look at the long-term monthly picture. I would argue that right now the German market is actually trading exactly as the bulls would want to see the RSI is back above 69.1. So as long as the German market is holding above 69.1, that's great. The bulls are in control. Otherwise, if it fails to hold above this threshold, that would be the first sign that potentially we are coming back to test this backtest breakout line or the failure point line from 2015. We broke below here. We tried to move above the line. We were rejected there off the highs here, and now we are in the underside of this line. Failure to move above that line might suggest that we can still expect a pullback, but the key is holding below or above 69.1. Right now it is above 69.1. We need to give the market the benefit of the doubt. And there's also another argument that right now we are pushing above the break point that we've been discussing for many weeks. Keep in mind we had been talking about potential for resistance based on this break point here. So we were expecting the market to struggle, or at least consider whether it can hold above that blue line. Right now we are firmly above that, so that's a good indication of potential for upside. As long as that's the case, that would be similar to the last time the market had broken down in 2000, which is this break point of the highs here. We go into a major bear market. So we came back here, almost failed, but finally we figured a way above that line. Once we break out here, you can see that corresponds with this movement. Market would go on a fantastic run after that. So above this line here, the market has a chance of recording higher prices, more so if the market can hold above 69.1, just like it did during this period here between 2006 and 2008 for this major run. So holding above 69.1 is key. Now we take a look at the FTSE, a little bit of a different picture. Here we can see topside RSI resistance continue to come in play. It needs to clear that line if this market is to trade higher. And don't forget that as of the close of last month, we were showing rejection on this backtest line. So the FTSE needs to be above those two lines if we are to see higher prices. Another way of saying that if the FTSE wants to move higher, it needs to take out the recent monthly closing high from about a month ago. So if it can clear the recent monthly closing high, and the price to watch there is 7322.92. A breakout above that price is exactly what the bulls want to see, because a breakout would actually be moving the monthly RSI to 3-year highs, which is what would be giving a major buy signal. We can see that right now one of the MACDs is also close to 3-year highs. So a price breakout is needed here. Otherwise, if we can see a breakout, that would confirm great quality breakout, because the monthly RSI and MACD would be moving to 3-year highs, which is one of our minimum requirements. If we take a look at the Canadian market, another month here of trying to break out, and you can see that this has been unsuccessful over the entire 2017 trading year. You can see a failure to break out here. The price there that we've been watching is 15,625.73, which is the closing high from 2015. We failed in January, failed in February to close above that level, failed in March, failed in April, and now we are beginning the month by dropping a little bit. So as long as the market here is struggling to hold above this price, we have to suspect there's potential for resistance. Also, we need to watch the RSI on the monthly. Anything below 69.1 and failure to break out would be pointing to lower markets. Otherwise, if the market wants to move higher, it is going to have to clear that prior closing high on a monthly basis from 2015. We also would need the RSI to stay above 69.1. Remember, here we are also seeing that this is where we were expecting potential for struggle, because the market is coming back to test the back test of this line, which has been a problem since the break of the highs here, and now coming to test it. Failure to move above that red line would confirm that for sure the next major trend is lower. The reason why I say I would lean to a pullback is because we've come a long ways from the lows here to the current highs. We can also see here that the Brazilian market has an opportunity, if it wants to break out, and the level to watch here for a potential breakout is February's monthly closing high. The level to watch there is 66,662.10. Anything above that price would be a good breakout and a good indication of upside momentum. Also, a breakout, as we saw with the FTSE, would also bring the market to 3-year highs on the monthly RSI, which would be great for bulls. We can see that the MACD is already trading at 3-year highs. So a price breakout would actually be a buy signal. The problem here is that we are still contending with the resistance on the monthly chart based on the prior break from 2010. As you can see, this is where the market broke down. Once it broke down here, we've tried to move above that line. We did so in 2014 here and failed, and now we've been trying to move above this line since late 2016, still unable to do so. So either we can get a price breakout and a surge in prices, or we get resistance here month to month and we see a major decline. So to wrap up, let's take a look at the Argentine market, and we can see it continues trading at lofty prices. Can it see higher prices? Of course it can. But the question here is, we haven't seen any rest period. We need at least 1 month of rest before a breakout. And the last time we had 2 months of rest was here in 2016. We've had straight shot to the upside since the lows here, pretty much seems like. So that one is a market that you do not want to be buying without a rest period. Let's take a look at the Chilean market. This market was on fire a couple of weeks ago, but it's coming back to test this break point. We are still within a failure point there if we can show resistance. Otherwise, the market would need to hold above 69.1 and clear this resistance line, which was the break line of the highs here. So this is still being tested. Remember, monthly chart, they do take a while to play out, and we can see here that the New York Stock Exchange Composite is still coming back to test this break line, which was the break point of the highs of 2015. As you can see, the break there is what brought the market off the highs of 2015. Month to month, this is what we are testing. Anything above that blue line is bullish. Confirmation of resistance and rejection on that line might be telegraphing the beginning of a major slide. And also there's a top side RSI resistance line for the New York Composite. Now, this is the one thing I can say is that yes, some markets, if your markets are positive for the month, chances are they are advancing beyond resistance, which is great. Otherwise, world markets that are down for the month are confirming major resistance. So maybe some markets are leading us lower, we shall see. But ultimately, I would lean to potential pullback in world markets. The reason why I say that is because we've come off with a nice bounce off the lows of 2016. Nice movement since then. We are due for some type of a strong correction, and as long as the resistance levels are being respected by the market, we can logically expect month to month, not necessarily day to day, that ultimately, without breaking above some of these well-defined resistance levels, ultimately the market is due for a major pullback. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ESS. Woo!